Bitcoin is still stuck below 80,000. People are getting convinced that this is the beginning of the end and they are selling their Bitcoin. But we've just gotten one of the most bullish macro signals since the market started dropping late last year. And in this video, I'll show you exactly where I plan on placing the largest long order of my life, why I'm bullish, and why I believe you should be too. Now, the first thing I want to show you guys is, of course, that massive bullish signal. And I'm talking about the ISM PMI. You see, 2 days ago, we got a new ISM manufacturing PMI update, and let me tell you this, we beat expectations by a lot. So the one before that came in at 47.9, so that's still in contraction. The forecast of this one was 48.5, but the actual was 52.6. And that means the US manufacturing sector is expanding, okay? Anything above 50 indicates growth. Anything below 50 indicates contraction. And I want to just show you how much of an impact this actually has on crypto, okay? This is also what we call the business cycle. So let's go all the way back here to 2013. When the ISM PMI went from about 48 or 47.9 and printed a higher high of 53.2, well then that is exactly when the Bitcoin bull run here in 2013 actually started, and we got a rally of about 9,000%. Fast forward here to 2017, we saw the exact same thing. The ISM PMI was at 47.2. It printed a higher high of 51.3. And again, that marked the bottom for Bitcoin, and we saw a massive bull run. The same exact thing in 2020, and we can only anticipate that the exact same thing is going to happen now. Now, you might sit there and say, well, we've already hit 50 in April of 2024 and in February of 2025. So how come it didn't continue expanding, and how come we didn't get that parabolic run on Bitcoin? Well, let me tell you this. We're looking at the Fed balance sheet, and that will tell you exactly why the first two attempts of expanding failed miserably. So let's start here in 2013. The ISM PMI obviously went higher. It went from about 47, 48 all the way up to about 56. So again, expanding. Now, what you also notice is that the Fed balance sheet was simultaneously expanding. We see the exact same thing here in 2019, 2020. The ISM PMI went higher. Bitcoin, of course, followed, but the Fed balance sheet was also heavily expanding. Now, the two times where we've tried to break 50 into expansion here in 2024 and in 2025, the Fed balance sheet was contracting, right? It was going down. But now, not only have the ISM PMI printed higher, right? The other ones were still just sitting right at 50, but this one sits at 52.6. We've also just gotten out of QT, okay? So this expansion that we're seeing here mimics every other expansion that we've seen on the ISM PMI. But as you might be able to tell, we are still stuck below 80,000. So what do we actually need in addition to an expanding PMI to finally see healthier price action? Well, besides the fact that the ISM PMI is not going to be instantaneous, there's a few other things that can significantly help. Oh, and by the way, I just jumped on Twitter, so I try to provide as much value on there as possible. So if you want more analysis than I give to you here on YouTube, make sure you're following along on Twitter. And I want to quickly mention the DXY, okay? Because as you guys know, I've been really bearish on the DXY for a long time, okay? We're retesting here a multi-year resistance level. But if we zoom further in here, you can see that these last couple of days here, the DXY has actually been going higher. And why is that? Well, the main reason for that is because Kevin Warsh will replace Powell as head of the Fed, okay? We are getting a new chairman, and that chairman is Kevin Warsh. You see, what we really need for the most favorable conditions on Bitcoin is QE. But the problem is, it's very unlikely, given the history of Kevin Warsh, that we are going to see QE. You see, he is openly critical of QE and favors a tighter Fed balance sheet, which again means less liquidity across markets. And a lot of people are left worried. But let me tell you this, if they cut rates aggressively, well then it will expand their balance sheet. So let me explain exactly why that actually is probable in 2026. And I want to just show you guys this because I know a lot of you out there just have USDT laying around, but on Wex you can enable something called auto earn. That means you can earn daily interest automatically on the USDT that you have laying around anyway. So again, letting your stable coins work for you. Use the link down below if you want to check out Wex. Again, it's my personal exchange. Now, again, let's talk about the rate cuts, because previously people believed that we were going to see a lot of rate cuts in 2026, but now that Trump has appointed Kevin Warsh, well, then that sentiment has shifted a little bit. And again, that's also one of the reasons why we've had a small corrections here. You see people's liquidity expectations automatically drop when they figure out Kevin Warsh is going to be the next Fed chair. But the interest rates are sitting at 3.75 and the inflation rate is sitting at 2.7. And here's the thing, the true inflation rate, and yes, I've mentioned this before, is sub 1%. That is significantly lower than their baseline target of 2%. As I've also mentioned before, Trump has called for a $1.5 trillion military budget in 2027. That is up from $900 billion in 2026. So basically a $600 billion increase, okay? And when you get a bigger military spending like this one, well, then that means more fiscal support, and that means Fed can cut rates safely. We're also going to see the largest tax refund season in US history this year. Now, what this is going to do is put a lot more cash in consumers' hands, okay? And that's going to boost spending and growth. And again, that gives the Fed room to cut rates without risking a slowdown. And if you've been following along here on the channel or just been following Trump's takes on interest rates, you know that he wants them near 1%. Actually, he said he wanted it lower than 1%. And so a lot of people find it weird that he appoints Coinforge because historically he is strictly against an expansion of the balance sheet. But here's the thing, Trump is not the only one because Fed's Moran tells Fox Business he still wants to cut rates this year. Trump has no impact on the Fed. He doesn't control anything, but the Fed governor sets monetary policy. So again, his preference for lower rates directly influences decisions, unlike Trump, who literally cannot dictate policy. Not to speak about the rising unemployment rate, okay? December 2022, it was at 3.5%, and in December of 2025, it was at 4.4%. And yeah, that is not a massive increase, right? But the Fed cares more about direction. And as you guys can see, this is in fact headed in the wrong direction. We again also have Bauman saying Fed should be ready to cut rates again amid job market risks. And something like this right here is exactly what she's talking about. And make no mistake, guys, if the economy needs lower rates, he is not going to hesitate, okay? And that is Coinforge. It is literally his entire responsibility to ensure the economy is stable, and if that requires rate cuts, well then so be it. And because of all that, regardless of Coinforge being chosen or not, it is in fact probable that we're going to see rate cuts in 2026, and those are the exact conditions that we want to see with an expanding ISM PMI as we are seeing right now. Again, rate cuts increase the balance sheet, and there's a clear pattern here between the balance sheet and the ISM PMI. Every single time it has gone parabolic and we've actually seen a bull run on Bitcoin, the balance sheet has been expanding. So if we are going to see those rate cuts, well then the balance sheet is likely going to expand. And again, that means we are replicating every other business cycle, or in other words, every other ISM PMI expansion. Now, some of you might have noticed that global liquidity has been expanding, okay? The blue line here is global liquidity. As you guys can see, we're basically at an all-time high. And if we compare that to Bitcoin, I mean, it's looking directly opposite. You see, no correlation whatsoever. And the historical correlation between these two are 94%. I mean, you can also look at it just by looking and comparing these two lines here. Historically, they are very, very correlated, but that's just not the case right now. And why is that? Well, let's have a look at the Treasury General account balance, okay? Since July of 2025, this has increased from about 282 billion all the way up to now nearly 900 billion. That basically means the Fed is pulling money out the market, right? And parking the cash in the Treasury General account balance, which means they are offsetting some of that global liquidity that we're seeing. Now, what's important to pay attention to here, though, is the RRP. You see, the reverse repo is pretty tiny right now. We're sitting at 1.7 billion, pretty much 1.8 billion. And that means banks are not sitting on idle cash. So liquidity is ready, right? If we combine that with the Treasury starting to release some of that capital, I mean, we went from 974 billion January, the 27th of January, to now 897 billion the 2nd of February. If this continues, right, well then cash is going to flow right back into the market. And I want to just quickly end this video by again showing you the technical analysis that I've been looking at and where exactly I'm planning on entering. So again, we're looking at a bunch of different stuff here. Of course, the chart is Bitcoin on a weekly time frame, and let's start off by analyzing the RSI down here. Right now, the RSI on Bitcoin is at 31.9. Okay, now let's pay attention to history. In 2022, it bottomed in at 25.2, and we saw a massive rally following that. The exact same thing happened in 2020. The RSI bottomed in at about 32, and of course, we got that massive bull run. And again, right now, we are at those exact levels. I mean, we can even zoom out here and see that throughout history, this has only happened a few times. In 2018, where we, also got a bull run. In 2015, 2016, where we also got a bull run. Pretty much a bull market condition, okay? Every time the RSI is this low, well then historically, price is going to go up. Now, the yellow line that you're looking at here, right, that is the Bitcoin mining cost. And as you guys might be able to tell here, if I zoom in, the price is very, very near the mining cost. Now, the last time we went below the mining cost was in 2023. And as you guys can see, the market used this as support. And of course, that sent the market sky high. It actually also happened right before the 2020 bull run. And again, we got that bull run. So we have that lining up with this multi-year resistance level that is now turned support. We also have the 200-day moving average here lining up very, very well. We have two of the most probable Fibonacci extension tool zones, if you ask me. And again, we have the RSI down here. So pretty much the highest probability buy zone that I have ever personally looked at when talking about Bitcoin. And again, I have a buy limit order right now sitting at 71,200, the same exact order I mentioned in my previous video. And just because I've been getting a lot of comments, this here is a USDTM account, aka a live account. If I now switch to demo, you can see that we have nothing. I switch back and I have that extremely large order. And also, again, this is on WeX. As I said, it's my personal exchange. I personally believe it's the best, the lowest amount of fees. You literally cannot go wrong. And again, gentlemen, no matter how much data I keep looking at, I cannot help it but become more and more bullish. I genuinely have not seen a crazier buy opportunity than we're seeing right now. And I know a lot of you missed 2013, 2017, 2020. And so whenever the market now gives you another opportunity, you're too scared. Just like you would have been too scared here in 2020, 2017, 2013, and whatever future price action has in store for you. Again, guys, have I taken losses during this down move? Yes, absolutely. I've taken over $100,000 in losses trying to long this down move, but simultaneously, I've made over $100,000 shorting this market. So again, I'm not a perma bull, right? Sometimes I short it, sometimes I long it. And whenever you try to catch a bottom here and try to predict a bull market, you are likely going to get burned a few times before that happens. But you should account for that in your budget, right? And your winner that you hopefully will eventually get should outweigh all of those losses you took on the way down. That is my strategy. That has been my strategy. It's also what allows me to do this full time. I literally live off of my dividends, okay? I don't sell a course. I don't do anything. I live off of this. So I'm not interested in losing money, okay? It's what pays my bills. Anyway, ladies and gentlemen, again, I know a lot of you out there are bearish, and that is completely fine. You have your ideas and I have mine. Let's try to make crypto a more positive space, okay? All I see on crypto Twitter is negativity. I mean, come on, guys, we're in the same industry. Regardless of you being a bull or a bear, we should stick together and respect each other's opinion. Thank you so much for watching this video, and I will see you in the next one.